I said we're going to do some back testing today. Let's just quickly see whether we can do 1 or 2 back testing. All right, now look at the chart before you now. Confirm that this is a high. Everyone, confirm it's a high.
Yeah, took out the previous inducement.
Okay, can you use the annotation tool to start from this high and mark it for me? Start from this high. Everyone, please. Yes, identify the high. Identify the high. Okay, great. I'm going to play price further, and then you tell me what next to do. All right?
Okay.
So what are we to do now? Any action to take in the market now? Or should I continue to play price? Everyone, should I continue to play price, or is there any action we need to take again now in the market?
There's an order block that price just tapped into.
Okay, so we are here. We are here. Look at where the market is now. What is the next step to do? We have identified that we are bullish because this is a high and it took out inducement here. So what next are we waiting for?
Yes.
Everyone, what next are we waiting for?
Wouldn't we be waiting on the lower time frame confirmation back to the upside, or something before that?
No, you need to wait for the high to be taken out so you can establish the low.
Correct. We have identified our high. Why? Because it took out inducement, meaning that we are bullish.
Yes.
And therefore, you need to wait for price to come back up to take out this major structure high and close above it, isn't it?
Oh, okay.
Correct.
Yes.
Well, yeah, I see. Okay.
Yeah, it might have gotten taken out.
Now,
if you try to draw a proper straight line, it's hard to tell whether that high was taken out.
okay. Now, take a look at this. Take a look at what is happening now in the market. We are looking for this high to be taken. This high.
Correct.
Yes.
Okay, to confirm when that high is taken. What are we confirming?
Low.
What are we confirming once that high is taken?
You're confirming
The low.
the low. You're going to the lowest point
Okay.
between that high and
Okay.
that point and looking at the low.
Okay. So after taking out inducement here, all right, price travel back down. Where did you mark as inducement? Sorry. Where did we mark as inducement? Where?
Right there.
Is it here, this one, or this one?
The one before.
The one before this
That one.
long leg.
That one.
All right?
Yep.
That's the inducement, because your inducement must always be on the left-hand side. Okay?
Yes.
Now,
Yes, sir.
so we now assume that we are bullish. After taking out inducement, what are you expecting? If we are bullish, after taking out inducement, what are you expecting?
Reversal.
You are looking for,
No,
after taking
low.
out inducement, to confirm your high. All right? Because if you say this is a high and inducement has been taken, that means we are bullish. Okay?
Mm-hmm.
It means we are bullish. So if we are bullish and inducement has been taken, what next are you expecting from the market?
To take out that high.
You are
Take out
expecting, I'm coming, you have identified your high. Where is your low?
You
Not yet.
Where is your higher low before this higher high?
right. Yeah.
Where is your higher low before this higher high? Before this higher high, where is your higher low? Where is your last significant low, which is your higher low before that higher high?
Where the casket.
Is that your low, Allens? Everybody, where is your low before that higher high? Everyone, where is your low before the higher high? Do you know how to identify your low?
Oh yeah, it has to take out inducement. So that where Allen marked is correct.
So here is your higher low. This is a high because it took out this inducement here and created this low. And this low,
exactly.
this low sponsored the move up to take out this major structure high here. Initially took it out with a candle wick.
Yes.
And eventually it closed above this candle wick. All right? So this is your major low before the higher high. All right? So meaning that where is your trading range? Where is your
Between
trading
that
range?
low and that high.
Your trading
Between
range
that low
is this
and that
low
Lowest.
and this high.
Yep.
All right?
The lowest. Yes.
Are we together?
Yes, sir.
Yes.
This low and this high. This is your range low. This is your range high. All right? And so if this is your higher high and price has taken out inducement, what are you looking for within your trading range after inducement has
The
been
two
taken?
OBs.
You said what?
The decisional OB and the extreme OB.
Do we agree with him?
Yeah, your areas of interest.
Okay, so mark out your DOB and your extreme OB. Let's see. Remember what I said to you in the video? What are you to be looking for first of all as a beginner? Is it OB or order flow?
Order flow.
Order flow. Right.
All right? So can you mark out your order flow? Can you show me your order flow? Mark it out. Okay. So now take a look at this. There are other flows here that you need to actually look at. Okay. First of all, let me show you the first order flow here is, I think this one. Okay.
Yes.
Your first order flow is that one. After inducement, price tapped into it but failed and came down. So where is your second order flow? This one.
Right.
This one. Okay.
Yep. Yep.
All right. So if that is your second order flow, look at it. Second order flow, third order flow. Which one is your third order flow? This one.
No.
I'm coming. I want to mark out all the other flows. This one.
What? Why is that a valid? Why is that a valid order flow?
No, I'm coming. I'm marking out all the other flows within this trading range. Okay?
Oh, okay.
I'm marking them out. So you will tell me which one is the valid one. So we have 1, 2, 3, 4 other flows. Which one is the valid one? Everyone.
The last one you drew is valid. The first one you drew
Yes.
no is
The
not.
first one.
No, there's no fair value gap in the first one, and the second one is correct because it has a fair value gap. The third one is not correct, and the fourth one is correct.
Okay, just if it is correct, just mark tick it right. All right, just tick it right. If it's not correct, the one that is not correct, please mark it X. The one that is correct, tick right. Everybody, let me see. I'm waiting. I'm waiting. It's only Alex I'm seeing. Now, take a look at this. The first order flow. Does it have a fair value gap? Ask yourself that question
No.
first of all. Does it have fair value gap?
No, it does not.
There was a fair value gap here. Okay? There was a fair value gap here. Look at it. There was a fair value gap. You don't understand? Let me play price from here for you to see.
No, I see that fair value gap, but I thought what you had said, the fair value gap has to occur after the down.
I'm coming. Now take a look at this. This is the price. This is the candle that took out the high of this order flow, isn't it? Okay? Are we together?
Yes.
Now, if I play price forward, just let me do it slowly so we can understand. Can you see that? Is there, don't you find a fair value gap there? Take a look at it.
Yes.
Is there no fair value gap? Fair value gap has to do
Yes.
with 3 candle formation. Candle number 1, candle number 2, and candle number 3. So there is a fair value gap there. But something is wrong with this one. There's a fair value gap, which is a good, that's what you require. But let's continue to play price. We have not identified our high yet. So let's continue to play price. So for our high to be confirmed, where is the inducement for price to take out?
Yeah. First, no, I can't see properly.
You can't see?
Yeah, it is very faint for me, even with the glasses.
You can't still see like this?
Oh, yes, that's great.
Can we all see it now?
Yes, there is a fair value gap there.
All right?
Yes.
So if
Yeah,
this
it is now
high,
clear.
if this high is to be confirmed, where is our inducement? There is a fair value gap here, right? You see that? Where is our inducement for this high to be confirmed?
Plus 92,707, 69,222 plus 9192707.
Can this be the IDM? Can you see my cursor?
I can't see the wick clearly.
Yes.
Yes,
Yes.
that's it.
I can't see the bottom of the wick.
Maybe something. Everyone, can you see this wick here, the bottom of the wick here, this one?
Very clearly.
Yes.
Very clearly.
Yes.
So
That's the inducement.
that's the inducement to confirm this high. All right?
Correct.
Yes. Yeah.
And so once inducement is taken out, this high is confirmed. But already this order flow here has a fair value gap. There is a gap here. All right? There is
Yes,
still a
sir.
gap that is yet to be filled up. That's why this order flow is a good area of interest, because it has met all the conditions of the order flow. It has the fair value gap.
Okay.
All right?
Okay. Yes,
So
sir.
once this inducement is taken out, this high is confirmed. So if price comes into this fair value gap, we can buy because we are bullish. But
Okay.
take a look at what happened. Let's continue to advance price. So price has taken out this inducement here. Can you see that with this wick? It has taken it out to confirm this high. Now price has come into this,
Yes.
our order flow. This is the first order flow. So this is known as decisional OB or order flow. Whether you call it order flow, whether you call it OB, is decisional. This is your first area of interest within your trading range is your decisional area of interest. All right? Are we together?
Yes, sir.
Yes. Yes.
And I said your decisional area of interest, whether it is an OB, whether it is order flow, whether it is TNCP, I said that first one is low probability. Did I not say so?
Yes, sir.
Yes.
I said it's low probability because it's 50-50 chance. It can hold price, it may not hold price. And therefore, so we continue to advance price. As you can see, it took price a bit higher. All right? It took it a bit higher. I want to zoom out. It took price a bit higher, but failed to take out this major high here. It failed to take it out. So let's continue to advance price. And boom. It failed. Can you see that? It failed. It took out
Yes, sir.
this first order flow. It failed. But this first order flow was a valid area of interest. It was a valid area of interest. If you go to your lower time frame, you can refine this order flow. All right? You can refine it. But it went up a little bit. Maybe if you went to your entry time frame and refine this order flow, perhaps you will be at a break even here. All right? So it eventually failed. So this order flow is no more valid. This one is no more valid. But it was a valid order flow. I want you to understand it. And I said there are only two areas of interest within your trading range that works. So that first one is taken out. All right. It reacted off of that first one momentarily, but failed. Now, this second one, take a look at it. This second one, did it have a fair value gap? This second one.
Yes, it does.
It didn't have a fair value gap. Okay?
But
It didn't have. Because it's already mitigated. This price, this one is already mitigated. Two things are wrong with this order flow here. Number one, I said only two order flows work within your trading range. The first one is the DOB. The second one is your extreme OB. Now, our DOB, we have marked it here. Price reacted off of that DOB momentarily, but failed. Now, this one is not a valid area of interest because only two areas of interest work within your trading range, your DOB and the extreme. So number one, this one is not a valid OB. This SMT, smart money trap. That's the first reason why this order flow is not valid. Second reason why it is not valid is that you need your order flow or area of interest. Your area of interest, you need your area of interest to be fresh. It must be a fresh area of interest. If it's been mitigated, then we don't need to use it again. And as you can see, this is the high of this your area, of this your order flow. And this is the low of your order flow. All right? This is the candle that took out this order flow, the high of this order flow. But the next candle came and mitigated it. Can you see this next candle? It came back and mitigated this order flow before going higher. Can you see that? The first one did not mitigate.
In short, it has been mitigated twice.
It mitigated here first here and came again, mitigated the second time. Once it is mitigated the first time, you don't need to use that very area of interest again. You want your area of interest to be high probability, then you need it to be fresh. The only time you find the smart money bringing price back to a mitigated area of interest is when they don't have enough orders to move price to where they want to move to. When they don't have enough orders, they will come back. All right? But in principle, you want to trade with a fresh area of interest, not a mitigated area of interest. Once an area of interest has been mitigated, you don't use it again. It's risky to use it. So that's why, for these two reasons, this area of interest is not valid. Any question? I'm talking about question concerning what I've explained now. Any question?
No, you have answered mine because I was about to say sometimes you see it being mitigated 3 times.
Yes.
But you have already answered it.
Okay. So this is a no-no. Then let's look at the third one. This third one. Okay? If I want to play price from this third one, let me say from here so that we can understand it better. From here. Okay? This is the third order flow. So I want to play price. Let's see.